Hey guys, Dylan Weston here. Today's video is another behind the scenes look at one of our weekly videos that we post in the Hardcore Headstart trading group chat. So this is a market update. It goes for about 40 minutes long. If you would like to see what we actually do in the group chat, then I recommend checking out two videos previous to this one. I explain like what we do in that one right at the beginning there. I thought I'd chuck this one out there just because it's been a little while since my last upload. And if you're looking for more content, then I highly recommend jumping over to the official Hardcore Headstart YouTube channel. The last video posted there was a podcast with myself in it talking about how you can turn $10,000 into 91 million. It's probably like one of our best podcasts about investing so far. So with that said, let's jump into the market update. Hey guys, time for the market update. Before we jump into it, I highly recommend checking out this video here from the compound. So it was just yesterday, 29th of September. Powell wants you to lose your job. It's really good because they talk about the Federal Reserve and what's happening. So the base case is from the Federal Reserve, this is from their mouth, that they're targeting 4.6% for the cash rate. So that's the interest rate that the banks themselves get. Obviously, remember that they always upsell it to us. So if you're talking about mortgage rates, you want to add like another 2 or 3% on top of that at least. But what's going around right now and why the sentiment is so bad is, yeah, obviously because the S&P 500 is at equal low. So that makes the odds of that we go lower even higher. But now the way that the Federal Reserve is speaking is like it seems like they may actually go above 5% with the cash rate. And so if you listen to guys like Chamath and a lot of other people are speaking about this, based on history, whenever inflation has been above 5%, like it is right now, we've had 8 and 9%, then to combat that, we have had to raise the cash rate above whatever the inflation rate was. So if we were to do the same, I don't think we will, but if we were, like if we have to, there's a possibility. There's always a possibility that anything can happen. So if we've had inflation at 8 or 9%, that means we have to have the cash rate above 8 or 9% to really kill inflation, because it's just, it's been very stubborn and it's not coming down. So with all of that, it really does seem that the sentiment is that everybody is getting prepared for cash rate to be at 5% in the US. And I think based on that, that has now created a 20% chance in my eyes that there actually is a major crash across the stock market. In this podcast as well, they just talk about like how devastating that would be to the real estate market. We're not talking just like real estate itself, but like the whole economy, the whole sector of real estate. So everything to do with real estate, like, Home Depot or like the Bunnings here, all of that stuff, construction, everything. It's a very large proponent or component of the overall economy. And if real estate takes a hit, it spreads because everything is correlated. Real estate, stocks, crypto, you can see it all moves together. So yeah, I think there's about a 20% chance that we could get a big crash or a big capitulation. I've kind of drawn in here this big green line where if we do fall all the way down here at about 2,140 on the S&P, looks pretty damn crazy, but that's only 55%. So that is, the same as the great financial crisis, 55%. So there's a possibility that we could get down there. I think there's a 20% chance we'll get a capitulation of some sort. Doesn't mean we have to get all the way down there. But I think it is a possibility. And if we do get down there, you might want to consider selling a kidney to buy the dip, because that's going to be a bargain of a lifetime. And if you're really looking at 2008, when you're measuring from the bottom and dollar cost averaging in just to get back to the highs, it's 132%. So always remember, based on percentages, yeah, if you go 55% down, you don't need 55% to get back up. You get more, and that's actually beneficial, because what is happening, the lower we go down, the further we get away from the 200 weekly moving average, you're becoming more and more of a bargain. It's getting really, really cheap. And it's at a point where the market is just not rational. I think another thing to think about as well is like, there's a saying that lower prices causes lower prices. So lower prices causes even lower prices. And what that means is like, at a certain point, even the bravest people, that think they're brave, they will sell based on they just can't handle this. It's gone down too much where they're just like, hey, I want to get out of the stock market. I thought index funds were for me, but it's at a level where I even can't handle the volatility of something as safe as an index fund. And they capitulate. And that's what causes these big spike downs. So I think that's similar as well. Like when the market's at a high with like say stocks or say especially with crypto, it's really hard to imagine, you know. Remember when we drew this like back in the day, like all the way down here, we're talking about it can come down to 12,000 or it can come down to 10,000. You know, you can actually it's easier to imagine a world now where we do come down all the way down here to like 6,000 or so. It sounds crazy when the price is all the way up the top here, but you know, the lower the price goes, the more we have recency bias that, you know, it starts to seem normal, or 20,000, that seems normal now. Now we look in hindsight, 67,000 seems very, very expensive. But in the moment, the 67,000, it didn't feel that expensive, right? And then the lower we go, the more people will capitulate in stage 4 downtrend. So, you know, like if we were to draw just a simple downtrend like this, right? What percentage of people would have sold out of the market here? Right? Compared to how many people would have sold out of the market here. Like at a certain point, you know, people are up here at the top, they're all nice and happy. And they're thinking at the back of their head, they probably haven't actually said this to themselves, but there's like a level. Depending on how brave they are, they will sell at a level, usually, most people. So for some that are really new to the markets, you know, they probably sold at a 30% dip. They couldn't handle a 30% dip, especially if they put their entire net worth in like that single asset that dipped by 30%. And especially if they're coming from a place where they just had their money in a, you know, a savings account where there was no volatility at all, 30% is really damn big for them. So it's all relative. But people with more experience, right, that maybe like, especially the crypto guys, they're used to 70%. But even them, you know, the typical crypto people, there is a certain point where even they capitulate and they just give up and they run for the hills. And that's where you get those massive spikes down like this. This is like the crypto fanatics. This is when they're giving up, a lot of them. Not all of them. Obviously, there's people buying the dip here and buying in at the cheaper price. But it gets to a certain stage where, you know, like if you really think about it, imagine someone, they invested like 10 grand here and they kept on investing all the way up and then it turned to 100 here. So they had $100,000 and maybe they kept on dollar cost averaging in, but think about the paychecks coming in. Maybe they can only afford to invest $250 to $500 every single week. But then if the price has gone all the way down 84%, that means they probably lost, you know, around $80,000 plus. So they're at a loss of 80,000. That means they're left with 20K. Now with them dollar cost averaging into the market, they're just watching all of that money vanish before their eyes. So if you were to add up all of the dollar cost averaging, I'm guessing there's probably like a 25K max. So think about all of that pain, seeing your money go from 100 and all of your hard work. A lot of people, they just give up, and that's what causes those big capitulations and they fully exit the market. And then when it goes sideways, as we know, that's accumulation of the smart money, but it's the time of staying down at those lows which really makes everybody think like, oh damn, it's not coming up anytime soon. And if these candles, you know, understanding the story of the chart, these are weeks, right? 1 week, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 weeks. 17 weeks when the price is low does not feel like 17 weeks. It feels like 17 months. Just like on the reverse side, 17 weeks when the price is pumping does not feel like 17 weeks. It feels like 17 days. It goes by really, really, really quick. So time is relative, especially with people that have money in the markets. So when something feels like 17 months, you know, you just get out because you've got no hope left. So luckily we have our knowledge and all of that. But I do think, you know, it does make sense that we do come down to these levels, especially with Bitcoin, you know, equal low, with S&P at equal low as well. I think it's very easy to come down for another 50% drop down to 10K. If we do get that 20% chance of a crash, I think it can get down to, you know, 3,000-ish to 5,000. And remember, like we've been saying in the past, remember what we're talking about with the 200 weekly moving average and why you didn't want to buy the dip on it? Because Bitcoin has never been through a financial crisis. It's never been through a period of high inflation where the economy really starts to go down. Bitcoin was invented in the best possible time. Remember, 2009. So that's why the 200 weekly moving average is not working on Bitcoin. And this might be the very first time in history where the 200 week moving average actually curves down on Bitcoin. And what you really need, and you need to understand this with all assets, especially assets that don't produce a cash flow, is they are to a certain extent just a Ponzi. You need more money coming in to keep the sentiment high, to keep everybody happy, because then they will keep putting more money into the asset, right? When sentiment starts going down really bad, we've got to remember the only thing that matters is supply versus demand. So if this 200 weekly moving average starts curving over, what's going to happen to the Ponzi? The sentiment's going to be really, really bad and no one's going to put money in the box anymore. That's what an asset is. It's like a box where here is something like Bitcoin. It's a box. You put money in, the box grows. You take money out and the box shrinks. If everybody's happy, people are going to put more money in, so the box grows faster, causing more people to have FOMO, put more money in again. Whereas it reverses in a downwards market. But the good thing about a cash flow producing a profitable business is in a downwards market, yeah, the market cap shrinks. But if their cash flows can stay the same size, at a certain point, the cash flow is so big that they can just do share buybacks and force the market cap bigger, right? That's our savior with profitable companies. And that's why when we're referring to the risk curve, the riskier assets are the ones that don't have cash flows, art, NFTs, cryptos, all of that type of stuff. And the safer assets are the ones that are super profitable today. And that's why. All right. So that's a bit of that. So S&P 500, yeah, sell the kidney. That's a 55%. Just look at that. If we were to get down there, I don't think we'll stay down here long. If you look at the 2008 financial crisis, it's mainly just like 3 weeks down there. Really, really scary. I think what's really important is just to look at the price like this. It looks like you can just keep going down forever when you look at it like that, right? Let's turn off everything and have a gaze. There, you can see like this kind of feels like, well, how low do you go? There's no support levels over on the left side for like the last decade. What do you do? But you got to remember, at a certain point, the price has gone down so far that technicals don't actually matter anymore. Or the technical thing is, hey, you've gone down 55%. You're pretty damn close to the bottom. You're at a level like as soon as you're down 40 to 50%, you really got to start thinking like, I'm just going to chuck money at this thing, dollar costing as hard as I possibly can, because eventually it's going to start reversing, and it probably won't reverse at a technical level. This time around, the technicals do look better. It does line up pretty nicely with COVID over here, and this in through here like that. So yeah, let's keep an eye on it. If the Federal Reserve, they do start hinting at they want to start lowering interest rates, then yeah, like it's probably going to be the time to go long, and that's what caused the bottom over here this time. So you really, the saying is don't fight the Fed, and we've had so much evidence to really not fight the Fed, because whatever they practically say or do, the market pretty much follows. So for now, there is a lot of correlation there. If we were to look at the dollar just keeps breaking out. I remember thinking over here that was the top and that was it, but it keeps on going. It's very strong. So the US dollar, it's a safe haven in times like this. Everybody, especially I like to think about the total amount of investors globally. Like imagine if you're a really rich person from a place like Malaysia or Indonesia or something like that. If you're super wealthy, you're not going to hold your currency, like your money in that local currency. You're going to hold US dollars, especially when it's volatile times. So that's how you can actually have an influx of money coming into the actual dollar itself, and the dollar pumps compared to other currencies. Samir posted the dollar milkshake theory. Highly recommend you look into it and just to understand it. This guy, he has been wrong for a very long time, but it's good just to understand how it works as like a mechanism. the dollar. I think something interesting to note as well, if we look at gold, let's bring up gold. Gold's not working. All the gold bugs are saying like whenever the world turns to shit, gold should hold up. Well, gold looks really, really bad right now. It's a double top in through here, double right there. Looks like Batman's ears. And then you've got the 30-week moving average going down really, really hard. You've got the pullback right now with a bit of a bounce, but she's not looking too good for the world of gold. So, but looking in terms of safe havens, remember when people were like, oh, Bitcoin's a safe haven, all this? No way. It's a high risk asset. It's a leverage play on the NASDAQ. That's what it is. People value it like a technology. They don't value it as gold. But even gold itself, it's less volatile, but it's been moving a lot this year. We look at the peaks over here compared to now, 18% for gold. That's a lot. But really, the only true safe haven right now, and the crypto people hate this, it's the dollar. The US dollar is the only safe haven right now in the world. And even, with inflation, it's not really that safe. So it's a real tough time in the market because practically everything in the market is losing money except for going short. That's the only thing that's winning right now. And yeah, I think even though the price is down lower, the price is down lower, and you shouldn't get more bearish as the price goes down. As the price goes down, you should get more and more bullish. You should get happier as the price gets down. That's why you should probably sell your kidney when you get down to these levels. You should be very happy to do that. You know, but we are at the lows again. We are at the 200 weekly moving average, but based on how the Federal Reserve, how they're speaking, I think it does sound like they really like what they're saying on the compound as well. Hey, we've already hurt the stock market so much. We're starting to hurt the real estate market, but inflation's not budging. We can't just start decreasing interest rates now to recover the stock market, because if we start doing that, then inflation will just get even worse. And we've done all of this damage for no reason. So you may as well take it down, right? Take it down, get it all over and done with, because, you've already done so much damage. So you may as well go the full mile. All right, let's jump into our trades. So Novavax, this is a really good one to look at. Big winner on Novavax. I feel like this is like the typical kind of trade these days where you go short here, it looks all really nice, you get a little win on the board, you feel really great about yourself, and it starts peaking up above the 30-week moving average. Honestly, I wouldn't be surprised if it went up even a little bit higher to really scare the living shit out of you. But yeah, this is a very typical trade these days. I think you guys are getting a lot of experience about how the market works. But then if you've been able to hold through this, right, this little short squeeze, then you're rewarded with this fella. So right now, if you're still in this trade, it's a 72%er. Right now, the price is $18, and it's getting close to that level of around $10 where we say, hey, at that point, you probably want to just get out, because the odds of a huge, huge ass bounce, it's really starting to increase there. I think you should also think about cutting this one as well, just because of how far away it is from the 30-week moving average. There is probably going to be a monster pullback. So you could probably think about cutting it now, because you're already in a 72% gain. And if you do get the bounce, you can just re-short it again, like up here somewhere, wherever it starts to reverse. At the same time, what you can do is look at the S&P 500 and say, hey, we're at equal low. I'm going to wait and close my shorts out when we do get the proper spike down. Close it then when it makes sense that we're going to get a bit of a bounce. We could also get a bit of a bounce right now as we're speaking. The market is getting held up by the 200 weekly moving average. But once you do get some big reds, whenever we do, if that's after a bounce or if that's next week and the week after, then you definitely want to sell, because if that happens, then this will probably go down even more. But it's starting to get at support. But even if it does get down to that level, you're going from 72% down to 85%. It's not that much, right? It's not that much of a difference. So 10 to 15% extra, is it worth it? Because you might get one of these big bounces and you see all of your gains get lost. Also, just a quick note as well, remember, don't open up too many trades unless you've closed them, because if we do get a big, if you're in this, it looks like you're using hardly any of the cash. The equity used in your account is looking pretty damn good at the moment. But if this starts to bounce all the way back up here and that profit starts to vanish, then that equity used, it starts to rise. And if you've opened up new trades, You don't want to open up new trades here on when the market's down if you're going short. You want to open up new trades when the market's bounced if you're going short, and vice versa, the reverse of that when you're going long. You don't want to open up heaps of trades when the market's pumping, because if there's a pullback, same thing happens to your account. Don't over leverage yourselves. So yeah, whenever you're getting now down to $10, think about cutting. I'll be thinking about cutting this one soon. Monday, it's holding in there all right. The 30 week is still going down. It's had a bit of relative strength recently. But yeah, if we do get down here again, it's good for another short. So that's Monday. Can still hold because the 30 weeks going down, but if it definitely if it gets above this level here, probably want to chop it. Airbnb had that relative strength, but the 30-week moving average, it played its part. With down here, I think this one's good to go to continue actually now. I think we will hit our targets with this one now. Just based on how we lost this a little double top here. So yeah, it looked like it was holding up. But now I think as well, like based on what the Fed's saying, something like Airbnb is a luxury to have. PubM looking pretty damn good as well. Stop loss above these highs here. I think it's probably going to start making new lows. Beyond Meat, very similar to Novavax, is getting close to that $10 mark. It's already gone on a big run. Probably wait for S&P to break down again. When that happens, wherever this thing's at, near the $10 mark, 11, 12, whatever it happens to be, you probably want to cut it. You can even argue just cut it now because you're down 60%. And you might want to transfer it to something better. But yeah, it is falling off a cliff. Beyond Meat. URI, this one's a really good one. I think G just posted, if it wasn't this one. Where are we? Yeah, it's not in here, but it's kind of similar to this. Actually not that one. Where is it? Here we go. Like whenever you get these little fakies and it comes back up and then you revisit again, then the odds of it working are way better because the fakie's done. And then you've gotten through the opportunity cost as well. So, you're saving a little bit there as well. DD is that perfect stock, the textbook stock. Looks like it's going to keep on falling. 30 weeks looking really nice. Let's see if we can bring it down to $30 or so. Pull still chugging along. It's trying to bounce long term. If you zoom out, it is at that channel. But if we keep on raising interest rates, this channel ain't holding. And it's going to keep on going down. Lucid looks good. Looks really good right now, even now, like for a short. Put a stop loss above the swing high here at 61%. I think we're going to start breaking and cracking these lows here. Rivian kind of reminds me of the Airbnb where it was having relative strength, but if we start breaking down below here at 29, then that's going to look like a mini double top. And then sentiment's going to start shifting. Everyone's going to start seeing the double top. It's going to bring in more shorts, and it becomes a self-fulfilling prophecy, and you start heading down lower and lower and lower. So I think it seems like if we do break down below 29, we're probably going to take out these lows here and go again. Cert looks really good, similar to Novavax. You're getting down to the $10 mark. So we might want to chop this one shortly. This one's all right, hanging in there. Vive is just hanging in there as well. Hanging at the lows, probably going to go lower. 30 weeks looking nice. Keep holding. Wait for the 30-weeker to start rising. GAW just broke down again. Looks very good. Nice little double top on it. Yeah, this one's going to start falling off a cliff. Theta looking really good as well. Get ready for the break of $1. Whole number $1. Crypto looks like it's really going to go down. ADA, same thing. Looks really good. The risk is quite small in this one as well. 45%. It's nice for a crypto. Owl just broke down right now. Is ready for a short. Nice head and shoulder on it. There is a head and shoulder here, which is good to short there. And there's a big macro head and shoulder as well in the work. So this one looks good. And under the whole number of $10. I think this one's all right. Just because it's an IBO. So you can break the rule of like near $10. I think this one's good to go down to like $5 or so. This one looks good. Nice pullback, nice fakey, a little bit of a short squeeze came in. This one looks all right to go short now. Put a close little stop loss here. But if you are from the original, the stop loss all the way at 77%, it didn't come close to that. So, yeah, not too bad. I think keep on holding this one. I think we can get it to brand new lows, potentially. D-Dog. D-Dog looks good as well. There is support in through here. So, yeah, you do have a bit of a flag in like this, like that. Call it cup and handle, call it whatever you want, but we probably break down. If the support holds, might get a bit of a bounce, and then go down again. You got a big macro head and shoulder top. All right, that's D-Dog. New York Times. Good old Bart Simpson coming back down to his eyelid, his eyeball. I think next stop is his nostrils. Keep holding. Tesla. There's been a bit of relative strength in the renewable energy space. I think that's why Tesla's held up. But I'm scared if you start losing this level at 263, I do think you get down here. If you do get down here, if this happens, then what happens next? Like imagine that happens, make it red. So yeah, what does that look like? It looks like a head and shoulder top to me. So I believe it's only been holding up because the sector's been holding up. I'm really concerned if we break down below 193. I think there can be a big drop incoming potentially with Tesla. But at the same time, you do also have the best marketer of all time, the best salesman of all time, which is Elon Musk. MicroStrategy, I don't think we're really talking about this one. Zoomy. Yeah, Zoom's really dying now. Everybody's like, I think the big thing is like, it just doesn't have a moat, and everybody like Microsoft Teams and all of that, they're just bundling everything in, like they're talking on all in and all of that. So they're just always making these bundles where it's just so cheap. So you're getting the same thing but cheaper. And you're already signed up with so many products from Microsoft and all of that. It's like a standalone brand, Zoom. So yeah, I think this one it's gonna start losing the lows. Let's put the lows in. So I think this one's good to go, Keep on going down to $20 or so even. Good old Zoomy. VSTO. VSTO has been real textbook. Never really tested anything. Coming up to support now, the 200 and the previous flag. Might get a little bit of bounce, but then I think we're going to start targeting those $10 marks. NVEI. This one looks ready to go right now as we speak. Looks beautiful right now. 40 from this price is about what? 54% stop loss. Looks beautiful. ARMK was one of those tricky ones. It did get above that little high, but it struggled to get above the high here. Even if you stopped out on this one, I think it's good to go for again. This is one of those ones where, yeah, you've gone through the fakie. You're back at the fakie, at the breakdown. I think it's good to go. Get a close maybe under 30, back near 29-ish. And it looks like it can target down to 20 easy. So I like these ones that have been tricky. I find like the trickier trades tend to be more profitable the second time around. So don't be too stubborn. Don't have an ego. Just because it might have stopped you out previously doesn't mean you can't have another crack at it. I like to think I want to get my win in the long run. GPN looks pretty good. Same thing. It's got a descending triangle, busted one, broke down, fakey, came down here again. Is probably has better odds of working this time around. AADI, no shares on this one. It's holding up nicely. Let's see if it does break down below the $11 mark. At the same time, it is quite cheap. But yeah, it's not that big of a deal. This one here, if we start breaking below 24, looks interesting. Stop loss above here looks good. Even this one here. The lower one's got a higher odds of getting squeezed, but looks all right on the grand scheme of things as well. Looks in a beautiful place on the chart. Can take this down to the previous low near $10. If we do get down there as well, a lot of panic will start setting in, so it might really get down to 5. Zippy looking good. Volatile one, but every single time, lower high, lower high, lower high, lower high. So it has been trading pretty well. Keep holding. This one's never activated just yet, I don't think. This one here, we might get a bit of a bounce up to resistance again and then head back down lower. Liking the look of it, liking the look of the 30-week moving average, liking the entry price even right now. Fakey up to here, back down. Could enter now, it's better. Past the opportunity cost and 35% stop loss. Nice and small in this one. ALE. Wow, this one fell real quick. Now at support, should stall out a little bit at least. Maybe a potential bounce on it at the whole number of 50, but once we lose it, it's probably going to go down lower. 30-week really starting to round down now as well. ZI, waiting on this one. Hertzy, waiting on Hertzy. Moderna. So yeah, Moderna looks good. It's been a tough one to hold, but a bit of a short squeeze here as well. So now if we get the close below, this one might be ready. Good old Moderna. This one never came, but can keep waiting on it. This is not necessarily, oops. This price action is not necessarily bad, because what is it? It could be just this coming. So let's be patient on it. Let's wait for it, and then as well, like the longer this goes on, the better. Because if we get something, the longer it goes, the stronger this resistance will be once it breaks. So no rush on it. Keep waiting. Twitter, nothing really ever happened with Twitter. Snappy. Snappy looks like one of those stocks as well. I just can't see how you can be bullish on such a company right now in the market. It's not looking too good. It's probably going to, start coming down to this $5 area. Snappy. Car. Same as Hertzy. This one's ready to go. A bit weaker. I like this one a lot because of the lower bounce over here. 58% is pretty big, but it does seem like a bubble, especially up to here. Whenever you have those big green candles with these big wicks right at the top, does this make sense? Within 1 week, we went from a 172 to 547. Looks like a meme stock to me. Looks like it can get hit hard. So this one looks good. AGIO. This is a bit of a tricky one. It had the bounce at support, but it's been holding up pretty strong here. I highly doubt it, can trigger 64 anytime soon. 30 week is starting to round out. Hopefully this is the high and it doesn't get above this. But sometimes the trades, they're just hard to hold. This one looks really nice. Nice cup and handle on it. Kind of had like the handle on an angle like this. So cup, handle broken down. You can even say this is a rectangle here, broke down there. This one looks good. Looks really good. 30 week starting to round down. And I like you've lost the big level of $50 as well. Yeah, so I think this is an easy one to bring down to 15-ish. This one went real quick, real hard down. Keep holding if you're lucky enough to get into that one. Nvidia, not much to say. It's gone down a lot. It's not looking the most bullish thing in the world. AMD just lost support as well. The semis are not looking too good. Zillow coming down. Good. It's got that relative strength that we're talking about. No shares, but if this does break, it does look like the Airbnb where you have the little double top. So keep an eye on that one. Coin looks like it's got more to go. Coin, that's for sure. A lot more to go. I think as well, like, yeah, they rely on volume itself. They make money from transactions, but the transaction size is like 2%, right? Like they get a 2%, 1 to 2% cut on every single transaction. But if people have less money, that means they have less assets under management. When there's less money in the system, yeah, there might be the same amount of volume in terms of number of trades taken, but the size of the trades, they're going to shrink. When the size of the trades shrink, then the amount of money they make each quarter shrinks. And then what do investors do? They forward project the decline in growth and they mark the price down. Pepsi is still holding up relative strength compared to the S&P 500, but it is looking a bit weak. I did say previously that I did think this level will hold. I'm not so sure now with like the recent update from the Fed. I'm not too sure, so I might be wrong on that one. ALLY looking very nice, breaking down hard again. I think the interesting thing to know is there's a bit of a trick with cup and handles. Like originally without these lines, it does seem like this is the cup and handle. But like what happens if it makes a bear flag here? Then you're like, oh no, this is the cup and handle. And then it makes another bear flag here. Oh, this is the whole cup and handle. If you keep doing that, eventually it's going to be a big ass bounce. These are just handles. These are just flags. I mean, so the first cup and handle is this. If you're going to say it's a cup and handle, this is the cup and handle. Otherwise, what's probably better is just to say this is a descending triangle here, and that's it. If you're going to say it's a handle, this is a handle. These are flags, right? So if we get a flag here again, they're just flags, the continuation patterns. So don't be measuring like, oh, this is the thing. We have to go all the way down here. You can get down there, but don't keep, making your lines to suit your bias. WM still holding relative strength like Pepsi. Yeah, I'm not sure how it's going to go in this environment because if the market does go through the crash, this is crashing too. Like everything will crash. If we do get that 20% chance that the market crashes, nothing will hold up. There won't be any stocks that hold up. Cozy, it's looking like it's in a place where it's getting pretty damn desperate right now. It's struggling at support here, so it does need a bounce. Otherwise, you're going to start coming down with Cozy. Hum relative strength is probably one of the strongest stocks in the market. Again, if the market does crash, I doubt it holds. Apple, looking pretty weak at the moment. Lower high, lower high, lower high. If we make equals over here, it's not looking too good. But one of the stronger fundamentally. Bubba, yeah, a bit of a bear flag on the side here. And I think the interesting thing to note is whenever you have, look at the price action here. Bounce, tennis ball, egg, stuck on the ground. So then you get the breakdown. Whenever you're stuck on the ground, acting like an egg, you keep on going lower. BMC, this one looks really good in terms of you're going through the dip, fakey, so it looks all right. Dash looks weak. This one looks like it really wants to start heading down pretty damn low, maybe even $20. NIC looking pretty damn good for the short. Nice weak head and shoulder. Left shoulder strong, head strong, weak right shoulder. That's what you want to see. That's textbook. Looks really nice. At support now, so it's probably going to start bouncing a little bit. I doubt you can get back above $1. Probably go lower after that. Lulu. Still waiting on Lulu. I need to put my alarm in, actually. Good old Lululemon. The rumor is the CEO or the founder, it's a rumor, bit of a racist bastard because he called it Lululemon because that's a very hard to pronounce name for Asians that can't say L's. So they always go Ruru Lemon or Ruru Remen. All right. Under Armour, you're at the lows here. You're at the greeny. So I remember, like we were saying, yeah, this is a bit of a flaggy. Technically, you're supposed to go short from here, right? You got the big shorting. So it is getting really cheap Under Armour. If you were to go short the flag, it's very small size, but the tough thing is you have support right here. But if we start breaking down and below, look pretty good. So now the environment's changed a bit. It does look all right. ADS, real quick one on this one. It didn't hold at all. I think I was talking last time. It would be better if we had a little bit of a smaller pattern within a pattern. That would be even better. So then we'll get more touches across the green. Let's make it red now because it did break down. But this one looks weak. It can break down pretty quick to $1. So yeah, support didn't hold at all. Get rid of that for now. ACCO. This one looks good. Let's make it red. Looks ready to go right now as we speak. Stop loss above these highs here. Mind you, we are a cheap stock, so we've got to be careful with these cheap stocks because it is easy for it to bounce 100%. So the risk is bigger. So sometimes, personally, myself, I like to look for smaller stop losses where you can put on a little bit more size. So you make more when it goes down. HES, holding up near the highs, looking pretty good. Wait on that one. WCN, wait on that one. Nifty, waiting on that one. Affirm. Affirm's I think it's interesting Affirm because it's buy now, pay later. And right now, what is it fundamentally? It is unsecured loans. If we really start going into a recession because the Fed funds rate starts going above 5% and all of that, people aren't paying this shit back. Like, I can't see. I think a lot of people might default on this stuff. So right now, the theory is earnings are still good because savings rate is still high. People still have savings. But as the interest rates keep on increasing, and if people aren't careful and they keep spending, yeah, earnings can hold up for a little bit, but eventually the savings in people's savings accounts, once that vanishes, then the market, goes down. So that's the theory of what a lot of people are saying right now of why the earnings are still holding up because still got savings from the bull market. This one was a real quick one. Good luck if you got that one. I personally didn't. Same with this. Real bloody fast. VNT. Real bloody fast. All the Sandeepers. I don't know what happened to Sandeeper that day, but he found all the rippers. They went down overnight real quick. All right, this one here looking pretty good. Good to go right now. Looks like it's acting as an egg. I've kind of get like head and shoulder vibes on this one. Weak right shoulder to me. So this one looks good. Looks good for it to keep going down. VTNT. It's a bit of an interesting one, this, but yeah, I think we can draw horizontal in through there like that. Equal low right now. Had the bit of a fakie back down, acting as an egg. I think we go down lower. Got a lot of room to go in terms of the drop down to 30. Service now. Another one that looks ready to go. Call it cup and handle. Call it head and shoulder with a lagging right shoulder. Call it whatever you want. You could call the head and shoulder from here as well, on a bit of an upwards angle like that. And then you've got the handle like that. That's probably the best one, actually. But yeah, this one's ready to go short right now. Same as MO. CME, this one's ready to go right now as we speak. Weak right shoulder. Looks nice. AKAM. This one's already gone. Nice little stop loss on it. I like this one, little 15%er. So those are the kind of ones that I personally like. Little nice stop losses. SBAC. So it's a REIT. Same as like American Tower Corp. But nice pattern on it. Really nice pattern. So descending triangle. We love those ones. You got support over here though. So if we go down to 230, expect a little bit of a bounce. And then if we're going short, hopefully it does go lower. AKLI. Yeah, this was the Chummer one. Jesus, what happened to this fella? So bubble, everybody gets caught off guard, bear flag, and down again. I would get out of this one pretty soon. As soon as the S&P really starts breaking down again, like we're saying, close this one alongside others like Novavax. SLG, kind of like another one of those similar ones. Technically, you're supposed to go short here. This is bear flag, so you can go half size, but I'm not the biggest fan of these ones just because when they got support here. So sometimes they hold up. If sentiment's really bad in the world, you can just go straight through it. But technically, we have to be strong and try and mainly short the good shit right at the top here. So you can put full size if you got in here, but if you got in here, half size max. If not, a little bit less than that. NXT, cheap stock, but good. A lot of stocks on the Aussie market are cheap. This one looks pretty good. Even if you have missed it, from here looks pretty good as well. Stop loss, what are we talking? 38%? Not too bad. Not too bad, especially for a short. 38% is pretty good. Goldie breaking down. And that's pretty much everything for all of our trades. Pretty sure I got everything there. But yeah, overall, the market, as I was saying, I'm more bearish this time around than over here on this left side. I thought I'll be getting more bullish over here. But yeah, seeing how the Federal Reserve has kind of flip-flopped a bit, I think it does make sense. Base case, I still think is green box, somewhere in the green box. But the odds of a crash, I think, have increased. So about 20% chance that we get a big major sell-off. All right, guys, that's everything for the market update. I'll be heading over to Bali next week on Wednesday, the 5th of October, to start our Mitsui investment into the dessert shop. So I'm going to try my best to keep pumping out these weekly updates. I think I should be able to do it. But if I'm a little bit off on some of the dates there, you'll know why. But overall, I think, we're nice and organized. We've got lots of trades, a lot of them ready to go right now for the shorts. I think it does make a lot of sense, to have a decent amount of your capital still hedged with the short. Remember, all it is insurance. We're not trying to make an actual profit on that now net worth. Remember as well, the lower we go, the more dangerous it is for the shorts. So think about that as well. But if there's a 20% chance of a crash, I definitely do like having 20% of my net worth in shorts to cover that risk. All right, guys, that's everything for the market update. If you've got any questions, you know what to do, and I'll see you in the next one.